Welcome to The Explainer. Today, we're going to break down a massive shift. A real tidal wave of global money that's completely reshaping the banking sector in one of the world's fastest-growing economies.
Okay, let's just start with one single staggering number. $15 billion.
Yep, that's how much new foreign investment has been pouring into India's banks just this year. We're not talking about a trickle here. This is a flood.
So you got to ask, right, why is all this happening right now? And what's going to happen next? Well, that's exactly what we're going to unpack in this explainer. To really get a feel for just how fast this whole thing blew up, you just have to look at what happened back in October of 2025. We're talking about a few incredibly busy days.
What you're seeing here is this incredible one-two punch. You've got these two massive private deals happening almost back-to-back. And then boom, just a few days later, there are reports that the government might be changing the rules. It's that combination, the private money and the public signal, that really turned this whole thing into a tidal wave.
So, the big question is, why India and why now? What's pulling all this money in? Well, it's not just one thing. It's more like a perfect storm of four key drivers all coming together at once.
Okay, number one, the sheer growth potential. India's economy is one of the fastest growing in the world. So for an investor, that looks like a huge, long runway for growth. Especially when you look at lending to regular people and small businesses. That market is nowhere near saturated.
Second, the regulations are getting easier. It looks like the government and the central bank are becoming a lot more accommodating. They're basically signaling, hey, foreign capital, you're welcome here. They're rolling out the welcome mat.
Third, the banks are just healthier now. You might remember that a few years ago, they went through a really tough crisis with a lot of bad loans. Well, they've done a major cleanup since then. Their books look a lot better, and that's done wonders for investor confidence.
And finally, number four, you have to look at the global picture. There's a lot of uncertainty and stress in other big markets around the world. So investors are looking for somewhere stable, but that also has high growth. And right now, India really stands out from the crowd.
Okay, so let's put some names to these numbers. Who exactly is making these huge deals? You're about to see that this is a truly global affair, not just money coming from one place.
And this just illustrates the point perfectly. Look at this. You've got capital flowing in from a major bank in the UAE, a huge private equity firm from the US, and a banking giant all the way from Japan. And they're all pouring money into India's private banks. Now, as you can imagine, a wave this big has all the experts talking. And they're basically split into two camps. On one side, you've got the optimists. They're calling these deals transformational, saying this new capital will improve everything and help the banks get much bigger. But then you've got the more cautious voices. They're pointing out the risks, like high prices and the real-world challenges of actually making these deals work in a complicated market.
So what does this all actually mean on the ground? What are the real-world impacts? Because a wave of investment this big doesn't just stop at the bank's front doors. It sends ripples across the entire ecosystem.
Think about it. This influx of cash has a massive ripple effect. The Indian banks, they get a ton of capital to grow. The wider economy, a stronger banking sector could mean more credit for everyone. And for customers, people like you and me, it might mean better service, new products, and more competition. Of course, for the regulators, it's a whole new challenge. How do you balance bringing in all this money while still keeping everyone's deposits safe? Okay, but let's not get ahead of ourselves. Every huge opportunity like this comes with some pretty big risks. It's really important to understand what could go wrong here, because this is definitely not a guaranteed success story.
So both investors and regulators are keeping a close eye on four key risks. First, asset quality. If banks start lending money too fast, will they start making risky loans? Second, execution. Can these foreign investors really handle the local market and all its rules? Third, policy risk. What if the government suddenly changes its mind and isn't so welcoming anymore? And finally, valuations. Have prices just gone up too high, too fast? Is there a bubble forming?
So with all that in mind, where does this all go from here? We can kind of map out three possible futures for what might happen next.
Okay, scenario one, and this is probably the most likely, is what you could call a managed opening. The government keeps raising the investment cap, but it does it cautiously, putting in safeguards to manage the risks. So the capital keeps flowing in, but in a nice, orderly way.
Then you have scenario B, the super optimistic or hot money scenario. This is where policymakers just throw the doors wide open. A flood of capital rushes in, the whole sector's value skyrockets, The potential rewards are massive, but so is the risk of the whole thing overheating and creating a dangerous bubble.
And finally, the pessimistic case, Scenario C, the policy slowdown. For whatever reason, maybe political, maybe regulatory, the reforms just stall out. Investor confidence cools way down, and that big wave of foreign money, it pulls back and becomes a lot more picky.
So what are the odds? Well, if you ask the analysts, they're putting a 50% chance on that balanced managed opening scenario. And then they're giving a 25% chance to both the hot money boom and the policy slowdown bust. So the general feeling seems to be one of cautious optimism.
So the takeaway here is pretty clear. A huge shift is happening. That $15 billion, that's probably just the beginning. Which leaves us with one big final question to think about. Is this a true game-changing transformation for Indian banking? Or is it a high-stakes gamble? A bet where the risks might just be bigger than the reward?